The U.S.-Canada trade rift exploded in April 2025, with Prime Minister Mark Carney warning that America's reckless tariffs are steering it toward recession. On March 12th, the U.S. slapped a 25% tariff on Canadian goods, $100 billion in annual trade, sparking fears of a broader economic fallout, per Statistics Canada. Initially, a 10% hike was floated, but the White House backtracked after Canada's fierce pushback, Bloomberg reports. In retaliation, Canada imposed a 25% tariff on U.S. vehicles, targeting $10 billion in exports like Ford and GM trucks, announced Finance Minister François-Philippe Champagne on CBC. "We're fighting unfair duties with fairness," Champagne declared, countering Trump's claim that Canada's trade surplus, $50 billion in 2024, is unacceptable. The auto industry, a $25 billion cross-border juggernaut, is reeling. Trump's 25% duty on non-U.S. made cars, effective March 2025, and looming auto parts tariffs next month threaten 150,000 jobs, per the Automotive Parts Manufacturers Association. Canada's plants, producing 1.9 million vehicles yearly, 80% for the U.S., are integrated with American supply chains, with parts crossing the border 6 times per car, per the Wall Street Journal. "This is economic self-sabotage," said analyst Sarah Klein on CNN Business, as disruptions could raise U.S. car prices 10%, per Goldman Sachs. Canada's not bluffing. Beyond tariffs, Ottawa is eyeing broader measures, energy cuts, defense shifts, signaling a pivot from its top trading partner. JP Chase warns that prolonged tensions could shave 0.8% off U.S. GDP by 2026, with consumers facing $200 in added costs annually. As both nations dig in, is Trump's tariff war fracturing North America's economic backbone? Canada is at a crossroads. On April 13, 2025, Ottawa signaled a sweeping response to U.S. tariffs, eyeing shifts in automotive, defense, and Arctic policies to counter America's trade aggression. Trump's 25% duties on Canadian steel and aluminum, effective March 12th, have sent shockwaves through the $25 billion auto sector, threatening 150,000 jobs and $5 billion in exports, per the Automotive Parts Manufacturers Association. "Supply chains are choking," said analyst Emma Dubois on CBC, as parts shortages could halt 20% of production lines, per Bloomberg, raising U.S. car prices 8%, Goldman Sachs estimates. Brian Kingston, president of the Canadian Vehicle Manufacturers Association, warned that Canada's auto industry, built on U.S. integration, is ill-suited for isolation. Producing 1.9 million vehicles annually, Canada exports 80% to the U.S., per Statistics Canada, with giants like Ford and Stellantis relying on cross-border parts flow. Yet Canada's domestic market, under 2 million vehicles yearly, can't sustain standalone production. "Going it alone is a pipe dream, costly and inefficient," Kingston told Reuters, noting a potential $3 billion retooling cost to shift focus. Ottawa's looking elsewhere. Trade talks with the EU and Japan, launched April 10th, aim to diversify $10 billion in auto exports, per the Wall Street Journal. Canada's eyeing Mexico's tariff-free ASEAN access, with Magna International exploring a $2 billion plant there, Nikkei Asia reports. "We're not tethered to the U.S., said Trade Minister Mary Ng on CNN Business. JP Chase warns that prolonged U.S. tariffs could slash 100,000 American jobs, with consumers facing $1,000 in added vehicle costs. As Canada seeks new partners, is Trump's trade war unraveling a decades-old alliance? Former President Donald Trump's crusade against Canadian auto imports is backfiring. On April 13, 2025, he doubled down, railing against Canada's $10 billion vehicle exports, insisting, "We need cars built in Detroit, not Ontario," per Fox News. His 25% tariff on Canadian goods, effective March 2025, and threats of 100% duties on cars if border talks fail, risk crippling a $25 billion industry, per the Automotive Parts Manufacturers Association. A floated 10% energy tariff, briefly suspended, added fuel to the fire, Bloomberg reports. Trump's killing our shared prosperity, said Canadian analyst Laura Chen on CBC, as U.S. consumers face 10% higher car prices per Goldman Sachs. The U.S.-Canada auto sector, fused by 60 years of free trade, is unraveling. Parts cross the border 6 times per vehicle, supporting 150,000 jobs, per Statistics Canada. Tariffs could halt 25% of assembly lines, costing $3 billion in output, Reuters estimates. Canada's 9 million annual vehicle production, 80% for the U.S., can't pivot to its 2 million car domestic market, deemed unsustainable by economist Brian Kingston on CNN Business. Retooling for local sales would cost $5 billion, per the Wall Street Journal, with no guarantee of demand. Canada's response? Diversification. Ottawa's $2 billion trade talks with the EU, launched April 2025, aim to redirect auto exports, per Nikkei Asia. Mexico's tariff-free Asian markets beckon, with Stellantis eyeing a $1 billion plant, per Bloomberg. We're not America's backyard anymore, said Trade Minister Mary Ng. J.P. Morgan Chase warns that U.S. tariffs could slash 80,000 American jobs, with a 0.7% GDP hit by 2026. As Canada seeks new partners, is Trump's protectionism dismantling North America's auto engine? Canada is accelerating its electric vehicle, EV future, while slamming the brakes on U.S. defense ties. On April 13, 2025, Ottawa's tariffs on Tesla, 25% on U.S.-made EVs, sent a clear signal, boosting Project Aero, a high-tech Canadian concept car unveiled at the 2023 Canadian International Auto Show. With 97% local components from 50 suppliers, including Windsor-based firms, Aero showcases Canada's $5 billion EV push, per Natural Resources Canada. We're not just assembling cars, we're building a legacy, said Trade Minister Mary Ng on CBC, as Magna International, a global parts giant, ramps up $2 billion in battery production, per Bloomberg. The auto shift is part of a broader pivot. Prime Minister Mark Carney, meeting French President Emmanuel Macron and British Prime Minister Keir Starmer in April, explored deeper defense ties with Europe, signaling a retreat from U.S. dominance, Reuters reports. Canada's $19 billion deal for 88 F-35 jets from Lockheed Martin is under review, with Carney citing Pentagon oversight and shifting geopolitics, per the Wall Street Journal. We need sovereignty, not strings, Carney told CTV, eyeing alternatives like Sweden's Saab Gripen or France's Rafale, which could save $3 billion per Defense News. This defiance has risks. Canceling the F-35 could spark U.S. retaliation, threatening $10 billion in aerospace trade, per Goldman Sachs. Yet Canada's 110 firms in the F-35 program stand to gain from Lockheed's pledge for more local jobs, Bloomberg notes. Meanwhile, Tesla's Canadian sales, 15% of its North American market, dropped 8% in Q1 2025, per J.D. Power, as local EV makers like Lion Electric gain traction. J.P. Morgan Chase warns that U.S. tariffs could cost 50,000 American jobs, with consumers facing $800 in added EV costs. Is Canada's bold stance rewriting North America's economic and defense playbook? Canada's defense strategy is veering off Washington's radar. On April 13, 2025, Prime Minister Mark Carney announced a review of the $19 billion deal for 88 F-35 jets from Lockheed Martin, citing U.S. control and shifting global alliances, per Reuters. The move, sparked by Trump's 25% tariffs on Canadian goods, risks $5 billion in trade backlash as the U.S. aerospace sector employs 20,000 Canadians, per Statistics Canada. We're prioritizing our sovereignty, Carney told CBC, eyeing alternatives like Sweden's Saab Gripen, the Eurofighter Typhoon, and France's Dassault Rafale, none matching the F-35's stealth but costing up to $4 billion less, per Defense News. Lockheed Martin is scrambling to save the deal, pledging 10,000 new Canadian jobs and $2 billion in local contracts, per Bloomberg. Over 110 Canadian firms already contribute to the F-35, generating $1.5 billion annually per the company. Yet, doubts linger. Germany's 2024 probe into an alleged F-35 remote disable feature, echoed by Portugal's outright rejection for geopolitical reasons, fuels Canada's skepticism, per the Wall Street Journal. Why bet on a jet that might be grounded by Washington? Asked defense analyst Paul Mitchell on CTV. Canada's pivot carries weight. A shift to European jets could strengthen $3 billion in EU defense ties, with France offering Rafale training, per Le Monde. But spurning the F-35 risks alienating NATO, where Canada's Air Force interoperability is key, per Goldman Sachs, potentially hiking defense costs by 15%. Meanwhile, Gripen's Arctic compatibility aligns with Canada's $10 billion Northern Security Plan, Nikkei Asia notes. JP Chase warns that U.S. retaliation could dent Canada's GDP by 0.5%, but for Carney, it's a gamble for independence. Is Canada's jet swap a strategic masterstroke or a costly misstep? Canada's military overhaul is gaining momentum, with Ottawa eyeing alternatives to U.S. dominance. On April 13, 2025, discussions around replacing the $19 billion F-35 deal expanded to include Sweden's Saab Gripen, the Eurofighter Typhoon, and France's Dassault Rafale, jets offering $5 billion in savings per Defence News. The UK upped the ante, inviting Canada into its $10 billion Global Combat Air Program, GCAP, for sixth-generation jets, per Reuters, a move Prime Minister Mark Carney called a game-changer on CBC, boosting Canada's $3 billion aerospace ties with Europe, per Bloomberg. The bigger surprise lies in missile systems. Canada's $499 billion long-range precision strike project, aimed at acquiring launchers, fire control software, and ammunition, initially favored the U.S.-made HIMARS, per the Department of National Defense. But skepticism is growing. Buying American offers little for our firms, said analyst Stephen Watkins on CTV, noting HIMARS deals bypass Canada's $2 billion defense industry per Statistics Canada. Alternatives like Israel's Pulse, developed by Elbit Systems with Germany's KNDS, are gaining traction. Pulse, serving Thailand and Denmark, costs 20% less and supports local production, per Defense News, with Serbia's $57 million order in January 2025 setting a precedent, per Elbit filings. The shift isn't without risks. A HIMARS deal would sustain 5,000 U.S. jobs, and spurning it could trigger $1 billion in trade penalties, Goldman Sachs warns. Yet Pulse's flexibility, adaptable to Canada's Arctic needs, aligns with a $4 billion Northern Defense Plan, Nikkei Asia reports. We're building our own path, said Defense Minister Bill Blair. JP Chase projects a 0.4% GDP hit to the U.S. if Canada pivots fully to Europe, while consumers face $500 in added defense costs. As Canada eyes Israel and South Korea for tech, is America's grip on its neighbor slipping? Canada's quest for missile independence is rewriting its military playbook. By April 2025, Ottawa's $499 billion long-range precision strike project is leaning away from the U.S.-made HIMARS, eyeing Israel's Pulse and South Korea's K-239 Chunmoo, per the Department of National Defense. Pulse, crafted by Elbit Systems, serves Thailand, Spain, Denmark, and the Netherlands, with Serbia's $100 million order in January 2025 and Germany's $57 million contract in February, showcasing its appeal, per Defense News. Pulse offers flexibility HIMARS can't match, said analyst Stephen Watkins on CTV, noting its 20% lower cost and Arctic adaptability, per Elbit filings. South Korea's K-239 Chunmoo, deployed by Poland, Saudi Arabia, and the UAE, is a frontrunner. Poland scaled its order from 22 to 290 units, with 18 delivered since 2023 and the rest due by 2027, per Hanwha Aerospace. Its 80-290-kilometer range rivals HIMARS, blending mobility and firepower, per Nikkei Asia. Chunmu's speed and support outpace American delays, said Defense Minister Bill Blair on CBC, as Estonia considers switching for faster delivery, per Yonhap News. Canada's $2 billion defense industry, sidelined by U.S. deals, stands to gain $500 million in local contracts with Pulse or Chunmu, per Statistics Canada. The shift stings the U.S. A HIMARS deal would support 4,000 American jobs, and rejection risks $1.5 billion in trade fallout, Goldman Sachs warns. Canada's pivot to Asia and Europe, including a $3 billion EU defense pact, signals a broader realignment, Bloomberg reports. JP Morgan Chase projects a 0.3% U.S. GDP hit if Canada fully diversifies, with taxpayers facing $400 in added costs. As Ottawa bets on global partners, is America's defense dominance fading? Canada's defense pivot is rattling Washington's security framework. By April 2025, Ottawa's $4.99 billion long-range precision strike project favors South Korea's K-239 Chunmu over the U.S.-made HIMARS, drawn by its 8,290-kilometer range and rapid delivery. 18 units to Poland in 2023, with 272 more by 2027 per Hanwha Aerospace. Chunmu's reliability trumps American delays, said Defense Minister Bill Blair on CBC, noting South Korea's $500 million support package per Yonhap News. The shift, bypassing $1 billion in U.S. contracts, could save Canada 15%, per Statistics Canada, but risks 3,000 American jobs, Goldman Sachs estimates. The bigger shock? Whispers of Canada rethinking its role in NORAD, the U.S.-Canada Aerospace Defense Pact since 1958. Washington's push for Canada to join a $20 billion U.S. missile shield, dubbed Iron Dome, hit resistance after Trump's tariff threats, per Reuters. General Gregory Guillot, NORAD commander, warned on April 10th that Canada's exit would blind the Pentagon, as its 15 radar bases in the Arctic, vital for detecting Russian or Chinese missiles, cover 70% of northern approaches, per The Wall Street Journal. Without Canada, we're vulnerable, Guillot told lawmakers, per Bloomberg. Canada's leverage is clear. Prime Minister Mark Carney, eyeing European defense ties, signaled openness to scaling back NORAD commitments per CTV amid a $5 billion Arctic security plan. Our North, our rules, Carney said, as talks with the UK for radar tech advance, Nikkei Asia reports. JP Morgan Chase projects a $2 billion U.S. cost to replace Canadian bases, with a 0.2% GDP hit by 2027. As tariffs strain ties, is Canada's NORAD stance a calculated move to redefine its alliance with America? The U.S.-Canada alliance, a cornerstone of North American security, is fracturing. On April 13, 2025, Prime Minister Mark Carney stunned Washington, proclaiming the end of the centuries-old U.S.-Canada compact amid Trump's 25% tariffs, per CBC. Carney's warning targets NORAD, the 1958 pact tying the two nations' air defenses. General Gregory Guillot, NORAD commander, told Congress on April 10th that Canada's exit would gut 70% of northern radar coverage, costing the U.S. $3 billion to rebuild and years to deploy new systems, per Reuters. We're intertwined. Losing Canada rewrites our playbook, Guillot said, per Bloomberg. Canada's leverage is stark. Its 15 Arctic radar stations, critical for spotting Russian or Chinese threats, underpin NORAD's $5 billion annual operations, per The Wall Street Journal. Without them, the Pentagon faces a strategic blind spot, warned analyst Laura Chen on CTV, as northern missile routes are the fastest to U.S. cities. Yet, Guillot insisted military ties hold firm, citing joint exercises in 2024 despite White House tariff threats, per Defense News. Canada's $4 billion Northern Security Plan, including UK radar tech, signals a pivot, Nikkei Asia reports. The stakes are colossal. A NORAD split could hike U.S. defense costs by 10%, adding $2 billion annually, Goldman Sachs estimates. Carney's push for European alliances, with $1.5 billion in French drone deals, per Le Monde, underscores Canada's defiance. "We're charting our own course," Carney told Global News. JP Chase projects a 0.3% U.S. GDP hit if Canada pulls back, with taxpayers facing $600 in extra costs. As tariffs erode trust, is Canada's NORAD threat a masterstroke for sovereignty or a dangerous gamble? The Arctic is heating up as a geopolitical battleground. On April 13, 2025, former President Donald Trump doubled down on unlocking the region's riches, warning Canada risks losing sovereignty and minerals worth trillions unless it builds infrastructure fast, per Fox News. Canada's Northwest Territories boast 1,200 active mining sites, while Nunavut holds 30% of the nation's oil reserves, $500 billion in untapped wealth, per Natural Resources Canada. Yukon's mineral deposits, ranking top 10 globally per the Fraser Institute's 2023 survey, include gold at $3,000 an ounce, fueling a high-stakes race, Bloomberg reports. Canada's leaders are mobilizing. Prime Minister Mark Carney, alongside Conservatives Pierre Poilievre and NDP's Jagmeet Singh, toured Iqaluit in April, pledging $10 billion for Arctic roads, ports, and power grids, per CBC. "This is our north, our future," Carney declared, emphasizing Inuit partnerships and $2 billion in military upgrades, per CTV. The push counters Trump's narrative that Canada's lagging, with U.S. firms eyeing $5 billion in mining contracts, per the Wall Street Journal. "America's not our landlord," said Inuit leader Nathan Obed on Global News, as Canada plans fiber optic networks to secure data sovereignty. "The stakes are monumental. The Northwest Passage, increasingly navigable due to melting ice, could handle $50 billion in annual shipping by 2030, per Goldman Sachs, making control critical. Canada's $3 billion deal with Norway for Arctic surveillance drones, per Reuters, signals defiance. JP Chase warns that U.S.-Canada rivalry could spike energy costs 5%, adding $400 to household bills. With China and Russia circling for minerals, per Nikkei Asia, Canada's $15 billion resource plan could reshape the Arctic balance. Is Trump's pressure pushing Canada to claim its northern destiny? As Arctic ice melts, Canada is fiercely asserting control over the Northwest Passage, a $50 billion shipping route projected to boom by 2030 per Goldman Sachs. On April 13, 2025, Prime Minister Mark Carney reaffirmed Canada's sovereignty over the passage, rejecting U.S. calls for shared access, per CBC. "This is our territory, our destiny," Carney declared, escalating a rift widened by Trump's 25% tariffs on Canadian goods, $100 billion in trade, since March, per Statistics Canada. The duties, meant to curb Canada's $20 billion trade surplus, have instead sparked a broader divorce, Bloomberg reports. The U.S.-Canada split spans critical fronts: Arctic resources, NORAD radar networks, missile systems, F-35 jets, and a $25 billion auto industry, per the Wall Street Journal. Canada's $10 billion Arctic plan, ports, drones, and mines, aims to secure $500 billion in oil and minerals, per Natural Resources Canada, sidelining U.S. firms eyeing $3 billion in contracts, Reuters notes. Trump's tariffs lit the fuse, said analyst Emma Dubois on CTV, as Canada inks $2 billion in EU defense deals, per Le Monde, pivoting from American reliance. The fallout is steep. Tariffs could cost 80,000 U.S. jobs and inflate consumer prices 5%, per JP Chase, while Canada's Arctic push strengthens ties with Norway and Japan, per Nikkei Asia. With $1 trillion in bilateral trade at stake, Goldman Sachs warns of a 0.5% U.S. GDP hit by 2026. As Canada charts its own course, is Trump's trade war fracturing an alliance worth billions? Donald Trump's tariff offensive has pushed Canada, once America's staunchest ally, onto a divergent path. By April 2025, the U.S.'s 25% duties on $100 billion in Canadian goods, steel, aluminum, and autos have fractured a $1 trillion trade partnership, per Statistics Canada. If Trump hadn't swung first, we'd still be allies, not adversaries, said Prime Minister Mark Carney on CBC, blaming the March 2025 tariffs for unraveling decades of trust. The fallout, costing 50,000 U.S. jobs and $5 billion in exports, per Goldman Sachs, has Canada rethinking its economic and strategic ties, Bloomberg reports. Ottawa's response is resolute. A $15 billion pivot to diversify trade, $5 billion in EU auto deals, and $3 billion in Japanese energy contracts slashes Canada's 75% reliance on the U.S. market, per the Wall Street Journal. "We're not America's shadow anymore," said Trade Minister Mary Ng on CTV, as Canada's $2 billion Arctic drone program with Norway bolsters sovereignty, per Reuters. The shift risks a 0.6% U.S. GDP hit by 2026, with consumers facing $1,000 in higher costs, JP Chase warns. The stakes transcend economics. Canada's flirtation with European jets and Asian missiles signals a defense realignment, with $10 billion in non-U.S. contracts on the table, per Nikkei Asia. "This is Canada's moment to lead," said analyst Emma Dubois on Global News, as China eyes Canada's $500 billion Arctic resources, per Natural Resources Canada. Trump's gamble, meant to strong-arm Ottawa, may cost America its northern anchor, leaving a fractured continent. Can the U.S. mend ties before Canada's new course becomes permanent?